Hi, I'm Ernie Zora for Puritas Spring Software, and in this video I'll be discussing the 2017 tax reform legislation and how it affects the calculation of child support in Ohio. We're producing this video in January of 2018, and this question is definitely the question of the month. In fact, from the types of questions we've been getting, I'm suspecting that worksheet preparers might be surprised when they watch this video at how the new legislation actually pans out. At the outset, let me say that the changes implemented in the new tax bill affect only two lines in the worksheet, lines 8 and 19. Line 8 is the adjustment for other children. This is an adjustment to income because one of the parents is supporting children from a prior marriage. Now, back in the good old days, like 2017 and earlier, the adjustment allowed the parent living with children from a prior marriage to deduct the amount of the federal personal exemption for each such child. Historically, the exemption changed each year, and I believe it was adjusted presumably based on some federal index. At any rate, the value in 2017 was $4,050. The first thing to be aware of is that this is not an adjustment to a party's child support obligation. It's an adjustment to the income amount that is plugged into the child support tables when both of the parties' incomes are combined. So, if a party lived with two children from a prior marriage, would that parent receive an adjustment of $8,100, which is the exemption times 2? Well, not quite. The adjustment was reduced by the amount of child support received by the parent from the ex-spouse, and that's usually the biological parent of the other children. For middle-income families where the ex-spouse is actually making regular child support payments, this often results in an adjustment of 0. Let's look at an example file I prepared. You can see in this case that it's one that involves one child from a current marriage, with the father making $35,000 and the mother earning $25,000 annually. When we scroll down to line 8 and click on the button to bring up the associated dialog, we see that mother lives with one child from her prior marriage as well. Now, let's say that the spouse, the ex-spouse that is, made annual payments of $4,500. I'm going to enter $4,500 in there, okay? The mother would receive an adjustment of $4,050, which is the amount of the federal personal exemption. However, from that amount, the amount of support received, $4,500 in this example, is subtracted. Let me click on the Accept button, and you'll see that the amount on line 8 is actually 0. You can see what happens. Because there's no negative numbers allowed on line 8, the amount of the adjustment just remains right there at 0. So, unless the ex-spouse is failing to make child support payments, this adjustment, more often than not, ends up being a 0. Okay, so how has the Tax Reform Act changed this? Well, because the personal exemption has been repealed by the Act, it basically removes line 8 from the equation. I'll show you. Okay, I'm going to remove the federal tax exemption of $4,050. I'm going to make it 0 like it is under the present law. And we will click on the Accept button. You see what happens? Now it's always going to be 0. And actually, it never can be more than 0, regardless of how much the ex-spouse pays or doesn't pay. So essentially, under the new law, you can skip line 8. Is this change making a big difference in the case of ex-spouses who are not making payments? Well, using our example, let's make the change and see what happens to the obligation at the top of the screen. We'll bring up the dialog. And let's put in one child, federal tax exemption of $4,050. And let's just say there was no spousal support received, so we'll erase that $4,500. We'll click on Accept. And you see the amount at the top is $4,598.15. Now, let's go back to that dialog and change the exemption back to the dialog. There we go. Let's change the exemption to 0. and click on the accept button, and now the obligation has changed to $4,687.47. So that's a difference of $89 a year or $7 a month. So, you know, if you were thinking big deal, I'd say your assessment was accurate. Doesn't really mean that much. So let's move on to line 19. That's the second area that's affected by the Tax Reform Act, and that line deals with the child care credit. Let me scroll down there so you can see line 19. Now, unlike the line 8 adjustment, which affects the combined gross income, line 19 is a direct dollar-for-dollar adjustment to the child support obligation. However, similar to the line 8 reduction, the amount of the line 19 credit is reduced by any child care tax the party receives. I think the purpose of this is to prevent the party who incurs the expenses from double dipping, so to speak, that is, getting an adjustment of child support and also getting an adjustment of their tax liability based on the same child care dollars. Well, first, I'm not aware of any changes that the Tax Reform Act made directly to the child care credit calculation. I believe the mechanics of the tax credit calculation are basically the same as they have been. However, the thing to note is that just like in prior years, the tax credit affects the calculation in the worst of ways when the party incurring the expenses has a low enough income so that they don't pay any taxes. Therefore, when they don't pay any taxes, their child care credit doesn't matter what it is. It's always going to be zero because it can't be any more. It's not a refundable credit, and it can't be any more than the actual tax liability. This is where the child support calculators that you see around, the ones online, for example, can make a very costly mistake on the worksheets of the people who can least afford it. Consequently, one indirect way the Tax Reform Act impacts the calculation is that it may change the threshold under which there is no child care credit. Let's see if that's true by looking at an example. Before 2018, the point at which a party paid no taxes was about $18,000 for a head of household with one child, and the last time I made this calculation it was about $22,000 for 2 children and $28,000 for 3 children. So if a party was under that income level, they received no child care credit on their federal return because they didn't owe any taxes. And that means that their child care expenses on the worksheet were not reduced at all. It's easy to be confused by the way this works, but just be aware that a party always receives an adjustment to their child support obligation for child care credit expenses. What we're talking about here is how much, if any, that adjustment is reduced by the amount of their federal tax credit. Okay? Now, back to the Tax Reform Act. Under the new law, the threshold that I mentioned before, $18,000 for a head of household with one child, it's really about $18,300, which is the amount of the new standard deduction. Bottom line, just like line 8, there's not much difference before and after the Reform Act, proving the maxim that the more things change, the more they stay the same. One note of caution, at the time we're making this video, again that's January of 2018, the IRS has yet to publish much about estimating your 2018 taxes. But I expect there'll be more information available before April 15th when the first 2018 estimated tax payment is actually due. At that time, you can double check the threshold that I mentioned earlier. And by the way, if you're intent on performing the most accurate child care tax credit calculation possible, especially in the case of a lower income family, you'll be wanting to use our 2018 spousal support calculator or at least a bona fide tax application like TurboTax, because while a child support application can make darn good basic calculations of your federal tax, better than any other child support application I'm aware of, you've got to remember that it's primarily a child support calculation, a calculator, and not a tax app. Along that line, there's a YouTube FAQ video about spousal support and the 2017 tax reform legislation. So after you look at this, you might want to take a look at that one. As always, I had a great time making this video for you, and I hope you found it worthwhile. Before I leave, let me recommend the new Puritas Spring Software ebook, which is now available in paperback. It's called The Best of Law Office Computing, and it's available at Amazon.com for about $12, and it contains a ton of valuable law office information culled from previous issues of the Law Office Computing magazine. So, have a great day. Thanks for watching, and take care.